Welcome to today's video. Today is the 5th day of December 2012. Today's video will go over the silver chart and data analysis, but before we do that, let's talk about blind faith and its deadly consequences. I was bored last night and decided to do a YouTube search for full movie filtering by date added and long videos over 20 minutes. I've seen some movies that were available, but as I kept browsing, I found a video called The Virus of Faith. This was a video upload at the time almost 24 hours ago and only 6 views. I comment on the video, the biggest cancer of faith is the human's faith in fiat currency, and decided to give the video a thumbs up and do a mini experiment. What I found is that there were over 20 views that arrived in a matter of hours and 70 views as I write this less than 24 hours later on the video, full documentary, The Root of All Evil, The God Delusion, 1 of 2. One thing I do avoid too often, or one of my weaknesses on this channel, is my lack of bringing to attention faith and religion, for this is a serious attribute that needs to be fixed in humans having tensions, in humans having intentions of having a positive world. I used to be confused why fundamental Bible followers would watch my videos as I use math, science, and my data, as well as promoting free thinking and not to be sunk into blind faith. It is a contradiction for one to use logic on currency and fail to use logic on stories even more absurd than what you will find on the Looney Tunes. I am even more confused to why atheists, whom are proud and brag about using logic and science, and yet they still have faith on a fiat currency. If you do research using multiple sources on fiat currency, you would most certainly see the word faith a lot. The word faith can be defined via the Free Dictionary, states that faith is a belief that does not rest on logical proof or material evidence. It is very scary and consequential to place many large decisions in this world to faith when you are lacking logical reason. That is why it is very confusing to why many people use logical evidence on currency but not on biblical quotes. It is confusing to why religious people use logical evidence on biblical quotes and fail to do so on fiat debt-based currency. Sorry about that. There we go. After watching the documentary, I got a tell from Dawkins that he believes 911 was not an inside job, and therefore they are believing the lies that occurred over 10 years ago. Because of this, it is very critical, in my opinion, for humans to confront everything and anything with an open mind. Let's take a look at what fiat currency is all about from Investopedia's website. The definition of fiat money currency that a government has declared to be legal tender despite the fact that it has no intrinsic value and is not backed by reserves. Historically, most currencies were backed or based on physical commodities such as gold or silver, but fiat money is based solely on faith. Investopedia explaining it further, most of the world's paper money is fiat money because fiat money is not linked to physical reserves. Its risk becoming worthless due to hyperinflation. If people lose faith in a nation's paper currency, the money will no longer hold any value. And on a final note on faith, I realized sometime in late high school or early college that I was the opposite of closed-minded in that of being way too influential. This was a problem that I knew I had to have fixed, and my open mind practices started playing out in the early 1990s. The only way to find out truth is to locate tangible evidence to support claims. Okay, so that's a quick little note on that. Let's move on to silver data analysis. The first thing we are seeing is all the last seen prices on even numbers, starting with $1 from 2 all the way to 26, and then every $2 from that point further. So the last time the price has dipped below $2, or $1.99, was in 1973. The last time it dipped below $4 was on September the 14th, 93. And you can see all the years following from that point on. Right now we're in this little class here, as we're between 32 and 34. The asterisk on 50 was because it's only rumor, I guess, or evidence, like maybe, that it pierced above the $50 level. In 2011, it got up to $49.81, so that can't count. And there probably should be an asterisk on the 52, because just as there's theories that it went up to 50.5 in 1980, there's also theories it went to 52.5, which would mean that this would not be a never. Okay, let's move on to the daily chart. And Interesting little pattern because I've been stating so much about this thing to switch over the trend. You break through the established resistance, you come back to support, which occurred. Now, last week, this red candle was an unexpected sign, to say the least, but it definitely has changed the message of the market. For it did retrace a lot more than you would have liked, and then it followed it up with an inside period, just not doing too much. Yesterday's session, of course, down 2.2%. And today it's pierced below yesterday's low, making a new low not seen since this period in here. Now, as I stated before, this low, which was a lower low back in February, is fine as long as it makes a higher low. There's a higher low. And it could be possible that it develops a symmetrical pattern, making a pattern of lower highs and higher lows. It's very difficult to see what that situation is. Definitely key levels in between this area here, because as I've stated, as long as it makes a higher low, it's fine. Meaning, if it comes down to something like this, that I'm not going to count this at the low, I'll count this as the low. However, really for the most part, the two levels which are huge are 31.5 and 30. I think 31.5 is small concern, but going down to 30 would definitely be a reason to be concerned, although it very easily could bounce from those levels as well. As far as changing Fibonacci, I want to go from this high to this low. Now, I'm not able to get data today, at least for the last couple hours, from Dukascopy or livecharts.co.uk. They're giving me a warning message, too many requests per second. It's been like that all day. So I'm just going to pass on using that site for the day. And hopefully it'll be working later on. But I would like to use the hourly time frame to look at those more shorter terms, but I'm not going to now. Rather, I'm just going to take a look at this high and this low. I'm just going to adjust the Fibonacci using the exact same chart. There we have it. So today's move back down to the 61.8% level. For this move from here to here to continue, it's a bearish statement. It needs to have a decent move below here and stay below it for a decent amount of time, or really break down below 3160, and then the bear market would still be will be resumed, that is, and then we're looking at that possibility of that failed breakout. It's really overall majorly indecisive as I do see this, but you have this possibility of a failed breakout above here. But again, if you make a higher low from this point here, then you come back and test this level, you'll build like a cup and handle formation and everything will look bullish. So it's extremely neutral, in my opinion, on the short-term trading within this. And just maybe this will find that bottom at that area for the gold to silver ratio to get to that 52 area, which it has not done that yet. Maybe if it does do that, that might trigger, of course, being a key significant level for the gold to silver ratio for the higher prices in gold and silver. I don't know, but it's something we'll take a look at over as this week continues further, how this plays out, and I'll talk to you later on. And remember, ignorance is curable, but stupid is forever. Take care.